What is up, gangs? Duka here. In this video, I'm going to show you a few different trade setup that I have on my radar for the week ahead. And I'd like to call this coming week, wait for it, Advanced Patterns Week, because all of the trade setup that I have forming right now, they are all advanced pattern. I know most of you probably don't know about those advanced patterns, but they're very common when the market is trading sideways. Now let's see if the market is going up. You most likely will get trend trading or counter trend trading type of move or type of setups. And when the market is going sideways or is going on a flat line where it's neither going up nor down, this is where those trading setups mostly tend to appear. Now let's get stuck in the chart. Now the first one we have is the pound dollar. So on the 4-hourly time frame, we see that the market has been bullish because we can draw a straight line from the bottom left corner of our screen to the top right. But most recent move that the market has made, if I were to draw this out for you, the market previously made a double top and it did reverse. So as you can see here in that previous most recent move there, this is what we call the kill zone. So the market has come inside the kill zone, made its move start to rally up, but the market did not rally all the way up. And when it got to this level here, then it started to retrace. Should the market complete this pattern, then I will be a seller in that scenario. From that anchor leg, we will draw our Fibonacci retracement to see which type of Fibonacci ratios that we find in that move. The pullback has only touched the 50% retracement. This would put us in a scenario for a bad pattern. If we do get a Fibonacci 382 retracement, at least from the A leg to our B leg here, we can say that we have what we call our C leg. So to find a C leg, we must draw a Fibonacci retracement from A to B. The C leg must at least touch the 382 retracement, which we might have had from that candle there. I'm going to draw that for you again. Yep. So we had that from that candle. And then to get what would be our D, completion here, we must again draw our Fibonacci. We must draw our Fibonacci retracement from X to A. Then we look for an A86 retracement from X to A. So the A86 retracement is somewhere up there. Now to draw out, or we can just get our XABCD drawing tool. So X, A, B, C, D. So this is our pattern. Well, this is not valid until we get a day completion. Now let me remove that, and I'm going down to the 1-hourly time frame. I'm going to show you a pattern here that is also forming. Now from this move, so previously when the move was going up from up to down, we call that an anchor move because the move is going down. Now when the move is going up, we call that an impulse leg. So from our what would be X to A, what we have the 50% retracement hit. That would put us in for a bad pattern. Then from A to B, we have that, and this C leg did not violate our A leg. Then we withdraw that again from X to A. We are waiting for A86 to be hit. Now on Sunday, when the market is open, if the market drops down to that level here, then I would be placing my buy limit order. Now, while I'm on here, let me show you the way I would be trading this. Now, let me do this. Let me draw it. So I always front run my orders by a few pips. On the bat pattern, it's by 3 pips. I front run my orders. So front running is basically when you put your limit orders, whether it is for your stop placement, your entry, or for your targets, a few pips before a certain price. So the 886 price here is 134.26. Now my front run orders will go at 134.29. So added 3 pips on top of the 34.26. It would be 34.29. Now let me get my tools here. 29. So that's that. And then my stops would go at the 113 inversion. So from A down to X. I like trading this pattern better than the Gartley pattern because I get a much better risk to reward ratio when I take that. So you'll see that in a second. So conventional targets. So that's for target ones. As you can see here, this is about 1.4 to 1. Now, the next pair we have on the radar for advanced patterns is the New Zealand dollar. Now, let's try for the anchor leg. So from that anchor leg down here, we have, if we look at this here, we're going to have, from that point, we're going to have 2 different patterns at the same starting point. So from here to down there, we have the first 50% retracement hit and the market start to rally up. Then we have the 618 retracement. So from that, we can already see we have at least a 382 retracement. That would be for the Gartley pattern. I'm going to draw that right now. For the 618 retracement, we must have another 618 retracement from the A to B, which we have there. Now, I'm going to draw out 2 different patterns there with the same starting point. Now, when we have 2 different patterns with the same starting leg, we take the one that is last to complete. So I'm going to draw that green. Yes, that's all right. Now I'm going to get the 786, the 127 extension from A to B. So the 786 retrace, 127 extension, sorry. So that's for the Gartley. As you can see here, there is, let me see, what's the difference there? There's a 7 pips difference between those two. I would scratch that and I would be only looking to trade the bat pattern because it is the last to complete. So I'm going to draw out, and here again, my 3 pips front run rules. Now we have 0.6019. 3 pips below that will be 16. So that's that. And I'm going to show you another pattern down here, but in the 1 hour time frame that is forming down here to 1 risk reward ratio. That's on the bear bat pattern. So going down to the 1 hour time frame, we'll see this pattern here that is forming. Draw out our Fib ratio tools. So down here we have a 618 retracement hit, and then that's for the B leg. From A to B, we already have our ratio for the 618 retracement for the C leg. So 127 extension from A to B, would put us at this here. So this would be your Gartley pattern. In that scenario, we have a 1.1 to 1 risk reward ratio. I wanted to show you how I'm doing my pre-market analysis, looking to put myself 1 or 2 steps ahead of the market. And this is Advanced Patterns Week. And if you have watched this video all the way to the end, I really appreciate you for stopping by, and I really appreciate you for sticking to the end. Down in the description below, I will leave you a link where you can leave me a response to whether or not you want to learn to trade or you want to get signals from myself. Until then, hit that subscribe button, comment below what I did not cover and what you would like to learn in the upcoming videos in the future. And with that said, I'll see you then.